Hey everybody, this is Jim at SP500chart.com. It's about 3:40 on Sunday afternoon, November 17th, 2013. And we're going to take a look at what happened last week in the S&P, what happened on Friday in particular, kind of see how the week went and how Friday went. But before I do, I need to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. I think this is probably just about the only chart we really need to look at to examine what took place last week. And the first thing I want to show you is just to remind us exactly what last week consisted of, and that would be our 5 days of trading right here. We came into the week looking at this oval area. Of course, at the time, the oval did not extend into this week. That was a later development that we added on Wednesday. But we were still looking at the possibility of an inverted head and shoulders. Now, what happened on Monday was we stayed right up near this neckline area at about 1570. Between 1770 and 1775. And I looked upon that at the time as being maybe an indication that we were ready to get up over this line without forming the right shoulder. But instead, on Tuesday, we had a fairly down day. It wasn't down huge, but it was down consistently. And remember, if you will, those of you who are subscribers who are with me on Tuesday, we drew these two sets of lines, this one set of two lines on Tuesday's video with the idea that this looked like it was a descending wedge, which would be a bullish pattern that typically ends up producing an upwards move. With that wedge actually broke out late on Tuesday. Wednesday started out a little weak, came back down, got into that pattern again, but then renewed the emphasis to break out, broke out, and then later in the day got above our neckline. And then Thursday and Friday were days of decent upward movement, not huge days, mind you, but days in which there was just a consistent and steady buying pressure pretty much from start to finish. So we have a target of about 1802 that we are currently less than 4 points away from meeting. So as far as the week goes, I felt very good about things because we came into the week watching this line with the idea that if we get over 1774, then we should be getting up over 1800 with an 1802 target. And so far that looks to have been a pretty strong call. The only thing that really went crazy, nothing went crazy during the week. The only thing that was, nothing really went wrong. The only thing that was a bit strange was Monday when we had that very low volatility and we just really went sideways all day long, then suffered that weakness on Tuesday. This looked as if it might be setting up the knockout blow to get over this line, but instead of that, we had to come back down and pick up some more buyers before the S&P would have the strength to get over 1774. So we closed the week out with an all-time high once again. That was how many? That would have been the 3 days in a row setting an all-time high. And really, I think the week turned out beautifully well. Coming into this next week, the first thing I would say is I would expect this pattern to complete. I would expect us to get up to that target area. Once up there, then we just got to watch it and see if there's any signs of reversal. Right now, if we were to start selling off, I would say that we got a couple of trend lines that we can keep an eye on, one of which is this line right here, drawn from the low point of the inverted head in our inverted head and shoulders pattern, and then right here, which is the low point of our inverted head and shoulders right shoulder. It's interesting to note, I've seen a lot of inverted head and shoulders patterns. How often do we get a descending wedge for the development of that right shoulder? Quite often. And what that really plays out as is you get the rally off the low point of the head in the inverted variety of the pattern, and then you sell off in a very controlled manner, which really is the definition of a right shoulder and in an inverted head and shoulders pattern. Typically, the head is formed with something of a little bit more panic, a little bit more strong selling pressure. Then you rally back up to that point, but because during this deeper leg down, you have rid the market of a lot of sellers. When you rally back up to this point, since there are fewer sellers, the selling is just more controlled, a little less frenetic, a little less frightening, and then you get that rally back up, and the market often, after making one of these wedges in the inverted head and shoulders variety, after making that wedge, you get your move up. It's almost worth looking at and saying, next time if we have a left shoulder, a head, and then we make a wedge, maybe that's not a bad place to put your bet. So guys, I think it was a great week. If we look at things on a 5-minute chart, really nothing that striking. I mean, we had that nice upward move right here, and now we're going a little bit less of a pitch. But I would fully expect our target to get hit. So going into Monday, let's look for that target. Let's see if we make it. And if we make it, let's see what develops up here that might tell us that is all the market's got to give us for right now, or B, this is just a little pause in the action in the larger picture, which was a nice move up here and then sideways action. My personal feeling is often you get a nice move up and then a move sideways, and then you get a significant leg out of that sideways pattern. We saw this back in 2010, I recall, and I made a comment how the 5-minute chart or the 10-minute chart that we're looking at currently looks a lot like the daily chart back in 2010 after the flash crash. Even though we really didn't have that kind of a crash here, we did have the breaking of an ascending line. We came down, made this little descending channel here for a few days, rallied back up, and then we back tested it, which is very similar to what we saw in the daily chart in the inverted head and shoulders that developed in 2010. If this were to continue to follow that pattern, then we would eventually end up in the mid-1800s with this whole thing here being a flag, sort of, quote, flying at half-mast. I'm not quite prepared to go that far with it yet. I'd like to see some sign of a channel develop here, and we may see it. This could be a channel support line that I just indicated right here with this pink line. So with that in mind, I'm going to make this a little bit darker color. Let's make it green, because nothing competes with this right here. And let's extend this on out a little bit and see if this were to hold up in the days coming up as a support line that could take this market significantly higher. One thing that I kind of like about the pitch of this line, if we create a parallel line, and now if we can compare that with some of our other nice rallies that we've had off of bottoms, all of a sudden now we've got a line that is not quite so aggressive. And one more thing to point out, if we take this line and extend it backwards, we don't quite make it work, but well, actually it does work pretty good. So maybe we're getting something developing here where this could be a support line that even goes back into that second week of October. So guys, let's just keep an eye on it, see what happens. Right now I'm looking for a breach of 1800. If that happens, that will certainly, I think that, it could bring in more buyers because they look at it like, oh gee, now we broke an 1800, hip hip hooray. At some point we're going to find a top, because this whole rally goes back, if you look at it in the longer term sense. This teal line right here goes all the way back to November, a year ago. And we have been, with rare exception, with just one little breach in early October, we have been above this line. We've got some resistance lines up here that we may approach, but I'll be honest with you, they are pretty lofty. They're on up there. We don't really get to any expected resistance now until 1850. So let's just see what kind of strength this market has to give us and enjoy this ride up. I would say stick with it until it breaks. This is now, I think, undoubtedly a bull market. And I think the idea of a secular bear market, I don't think there's much reliance upon that anymore, because we are currently 200 points above that trend line across the 2000 and the 2007 tops. That would be this red line right here that's at about 1600, maybe a little bit below, maybe right at 1600, but where we are now, just a hair under 1800, I think you've got to look at that and you've got to respect the strength of this market. And quite frankly, people say, well, it's only doing that because the stock market is the only game in town. Well, it doesn't matter. We still have money coming into the market. We still have the dynamics of buyers and sellers, and we still have human nature and human psychology. So I think the chart is going to continue to work. Let's just keep watching it together and be ready, objective, and willing to see the signs of a top when, not if, but when they present themselves. Hey guys, thanks for watching. Thanks for your support. Take care.